I don't think we've had our market crash yet. This has been very orderly selling. A lot of people are throwing out the term crash or whatever. Yes, I agree. The Nasdaq was down 32% at one point. S&P was very close to touching intraday bear market territory. But as far as I can tell, that sell-off that we saw, although it was very aggressive, it was honestly not that bad. Let's even pull up the S&P really fast and let's take a look, right? If you take a look, the market was looking weak from December. The main sell-off that you kind of experienced started from March, end of March, I guess April. And then you kind of had this huge drop off from April down to where we're at right now. But if you kind of take a look, this sell-off that although it feels like it started in April and happened really fast, it's been happening since December. I'm just letting you guys know, if you think we're gonna have a bounce go all the way back up to all-time highs, I just don't see that occurring, okay? This is definitely a type of market you want to be trading, and you want to keep your risk tolerances lower. A lot of people think we've had a crash. I don't see a crash. And I think that's the number one mistake a lot of investors are making right now. I don't think they have a gauge for the market. A lot of the people who've gotten into the market started trading in 2020 with the COVID lockdowns. And I think they saw what was a 3-week bear market followed back by buying to all-time highs. I don't really see that happening this time. I see a prolonged bear market, and I'll tell you why. You have a situation where you have basically rising interest rates. You have the Russia-Ukraine war crimping supply chains even worse than they were already. You also have bad supply chains still out of China within the semiconductor industry. You have a recession already in China. China is in a world of hurt. You have the Evergrande crisis going on right now that hasn't played out yet. That's essentially China's Lehman. I'm not going to talk too much about all those details because there's just too much material to go over. I'm giving you high level understanding here. You have high oil prices with China's demand dropping right now. Imagine when China kind of picks back up again, because right now China's under lockdowns with COVID. And one of the most important things that I want to bring up of all the negative catalysts that are occurring in the market is a lack of a Fed put. It was a mistake to fight the Fed on the way up in 2020, and it's also a mistake to fight the Fed now. The Fed is taking an opposite stance right now, where they need to quash inflation by any means necessary. That means they have to raise interest rates. The Fed was once injecting massive amounts of money in the market, creating a backstop. Right now, it's going to be doing the opposite. For that reason, this leads to another big problem. Without a Fed put, short sellers are going to start running rampant. Myself, I will probably be at some point shorting the market, not as a hedge, but as one of my primary trades. I'm not there yet. We'll see if we get a bear market rally in the upcoming weeks or so. So you can kind of tell just by looking at the market right now, if you take a look at the stocks, we have already rallied pretty hard. I think there's a chance we go even higher to S&P 420, or SPY might bounce to 420, 425 before potentially another crack. It might actually crack from here. I don't think it's going to crack from here. We'll see what happens when the market opens on Tuesday, Wednesday, just because you have a lot of mutual fund window dressing and things like that occur at the end of every month. I will say this, I gave you a lot of bad news about the market, but there is some good news. Warren Buffett, who's a great investor, has been putting a lot of money to work, has been deploying his capital. He's bought Apple, he's bought CVX, and a few other companies. So there are some spots in the market. He's putting his money to work, so he must think this is a good spot. So it's not all bad. Some big time investors are putting their money to work. So I could be wrong about that. And I by no means am saying we're gonna have a market crash or whatever. If you're gonna get into positions, create stop losses, because we don't know how low this market can go without a Fed put at this point in time. As far as I'm concerned, we've had a lot of froth. So this brings me to my next point. Why do I not think this market has crashed yet? I don't think the market has crashed yet because we don't see that capitulation type of trade. During the 2020 crash, there were stocks that were selling at prices that just honestly did not make sense. And if you're a type of person who's been trading on margin or something like that, you were basically forced to liquidate. You lost everything. And that brings me to my biggest point. You didn't see that capitulation type trade yet, where things have fallen to prices that didn't make sense. Yeah, some stocks have crashed a lot. Palantir has dropped a lot. Coin has dropped a lot, but these are still like 50, 60% drops. For example, Palantir dropping to $1.30 would be equivalent to some of the prices that I was able to grab on stocks during the 2020 crash. Why this occurs is usually a phenomenon usually a phenomenon that a lot of people don't fully understand, but one of the main catalysts is a lot of hedge fund models break down. For that reason, their hedges don't offset their losses because they're on so much leverage, they're forced to liquidate, and a lot of hedge funds go broke. And because you don't have a lot of buyers in a major sell-off, they're forced to sell at whatever price they can get. And basically, this causes prices to not make sense. We haven't seen that yet. It's been very orderly selling. So I can't really say what we've had yet is capitulation or a true market crash. I want to stop talking about that, but the key thing that I want to take away as a tip for you guys, so that you don't make this mistake, is don't go balls to the walls on margin. If you're on margin, be very, very nimble. I would set stop losses. And I personally, for most people, I do not recommend trading on margin right this second. And you don't ever want to be at a point where you get margin called, you have basically 10 to 15% of the capital that you once had. If you're on margin, you get margin called because you mistimed the swing or the direction of the market, it will take you years to recover, if not longer. You might not even have the capital to play the game anymore. You'll be just like Anakin Skywalker at the end of Star Wars Episode 3, Revenge of the Sith, where he lost his arms and legs and basically can...
It's over, Anakin! I have the high ground! You underestimate my power! Don't try it! You were the chosen one!
You don't want that. Keep your capital, have some firepower to play the game. One of the other things that I want to talk about, and one of the precursors to what we saw, is a lack of bouncers. If you take a look, we had Facebook stock essentially basically drop a lot from 325. And realistically, a drop like this, a lot of the times in the market, you see a bounce at some point, usually. Facebook has failed to bounce above the price it has dropped for a while. We can also see it with Netflix. If you take a look at Netflix, a similar type of situation happened where it dropped, it bounced, and then it dropped again. And it's failing to bounce. This failure to bounce, I did pick up some Netflix positions, by the way. I bought it at 200, or I bought it at like 215, got stopped out at 200. I took another piece around 170. I've already sold that piece off, by the way. This lack of bouncing is a very negative sign, because usually if a stock drops this much, there will be some people who have been wanting to buy the stock for a long time come in and just step in, and you can see this recurring bounce. For that reason, I think right now the market is actually viewing everything, including Netflix, despite it coming off of a $680 price tag down to $160, as still being frothy at these prices. So that's one thing I want to keep in the back of your minds, is just because these things have dropped a lot does not mean it can't drop more. I mean, people were buying Netflix around 340 thinking it was a huge discount. It dropped a lot. There are videos of Kevin O'Leary. It's just so pathetic. Videos of him buying Facebook at 325, 250, 220. And he's just going on TV telling everyone to buy. This is a great opportunity. I just don't see it like that, you guys. Although I do think some of these stocks are gonna bounce and bounce a lot at one point. I think that bounce is going to be followed by selling. Right now, I am positioning myself, and I have positioned myself for a bear market rally. That's what I was doing last week. I was trimming and adjusting it because I was always not sure about the rally itself. I'm not on margin. In fact, I don't even have 50% of my capital deployed into the market yet. I think we're going to have a period of 6 months to 1 year where the market is trying to figure out where it goes. For all we know, this might be the low. But I think we're gonna rally and drop several times before over the course of a year. I don't see us rallying to break out highs at this point. The next thing I wanna talk about is it's good to be in doubt with your positions. Don't buy a position and fully accept that this position it's super cheap, it's gonna bounce from here. I had a subscriber on my channel last year talking about how he was buying NEO stock. It had dipped from like $60 to $40, and he started buying it on margin. I haven't heard from him in a very long time, and this is not a trade I took. I was trading NEO, but it was more of a day trade. But if you were buying on margin when NEO was like 40, maybe 32, thinking it will bounce, you're in a world of hurt right now. If you were DCAing with cash that was all yours, maybe you can get your money back. Maybe NEO will eventually, become the company that it wants to become. I just don't feel comfortable putting so much capital into a Chinese ADR. You don't DCA with margin, okay? DCAing is something you do with cash that you get from a job or something like that. You put a little bit to work at a time in several different stocks. Just because a stock has fallen from 60 to 40 to 30 does not make it a good deal. Some of these stocks have been very frothy for a very long time because of the Fed put, and that's just something you're gonna have to get used to. The lack of Fed put right now is gonna have its impact on stocks. It's also gonna free up a lot of short sellers who were scared to short sell the market to come out and just start shorting some of these stocks. Without a Fed put, there's no one protecting the market from short sellers. And rightfully so. I feel like a lot of people view short selling as a bad thing, but without short sellers, these prices never adjust back to what is a proper valuation. These stock prices stay extended for a very long time. In a lot of ways, I blame some of the losses you guys have been experiencing in the market on Jerome Powell, just jacking up the prices so high that even a stock down 50%, like NEO, Netflix, crashing well below 50%, people have stepped in to buy it only to be hurt by losing another 50%. So remember, always be in doubt, set your stop losses. It's good, in a lot of ways, it's good to be a little bit uncomfortable with your trade. But if you're, this is gonna sound funny, but listen to your body. There have been times in 2020 where I experienced a pretty big loss in 2020, where when I was going to sleep, I just felt uncomfortable and I had anxiety. And that was a sign that I should have covered my position sooner than I did. And I didn't listen to myself. The tape was rolling against me, yes, and yet I was adamant about trading a certain way. Also, it's very important to understand when the trade is done. A lot of the times we take trades thinking we get deals or we get a stock at a good price, right? But my thought is this: if there is a time where the trend has reversed or whatever, you need to get out. Hindsight's 20/20. But I just kind of want to show you one case example of when you should cut the trade. Let's say you were trying to buy NEO stock right here, and NEO bounces and whatever, and you're thinking you're doing all right, but then out of nowhere, you kind of see NEO has kind of fallen, and then it just gaps down one day. It's probably in your best opinion, it is in my opinion, that at this point in time, you're probably best off cutting the trade and reassessing it, rather than holding on to NEO. A lot of these stocks are still frothy despite coming off a huge loss. The last thing I kind of want to talk about is the concept of market imbalances. What are imbalances and why is this very important for you guys to understand in a bear market? So what tends to happen, and technically I guess in the S&P we haven't had a bear market yet. I don't know how you would describe it, but the bear market's defined as 20% or lower from the top. If the S&P closes there, we're in a bear market. Why you see so much volatility in a bear market is usually when the market stops dropping, everyone tends to start selling, but there's not enough bids. There's not enough buyers stepping in, which causes a market imbalance. That market imbalance causes dramatic drops in the price of stocks. That market imbalance usually tries to get filled by market makers and other things, but market makers don't take losses. They're gonna give you a price where they think they can offload it off to someone else or hedge it with options contracts. Just the same way, you have very strong bear market rallies. Yeah, in a bear market, markets can rally like 10%, like in 2 days. And you have that for the exact opposite reason. A lot of people have already panic sold. There's no more selling that's taking place right now. And there's no more mass people trying to get out. But out of nowhere, a lot of mutual funds have a lot of cash to deploy. This is usually caused by people working their jobs, putting money into a 401k plan, and mutual funds now having capital that they have to deploy. But when they go to deploy it, there's not as many people selling, and this causes an enormous rally. And this is why I think it's important to play out some of the window dressing periods, like the last few days of every month and the beginning of every month, for a potential bear market rally. Yeah, this video is going way longer than I thought it will. So for that reason, you know, the bounce that had occurred from the 26th, 27th, that I do see maybe can continue till the 1st or the 2nd of June. I would probably cut anything you added by the 1st, but yeah, during that time frame, you could have a lot of mutual fund buying without the selling, because a lot of the people that were panic selling have already sold at this point in time. So those market imbalances are going to cause jaw-dropping swings to the upside and to the downside. So for that reason, not only don't trade on margin, but when you start buying some of these stocks again to try to play a rally or to try to maybe short the market if it falls, go in with less size than you normally would, because the actual volatility in the market will make you will still make the trade lucrative, hopefully, if you pick the direction correctly, just from the volatility alone. Use the sizing of how much capital you deploy as your risk tolerance as well. Maybe the video gets clipped down to just this last piece, because I think, I don't know if I'll hold your attention for a full 30 minutes. But I want to talk about what I'm buying. People have been asking me, did I eventually end up buying more Palantir stock? Yes, but about 4,000 shares at this price, which is nothing compared to my original position. And I'm buying it because of a potential bear market rally. Palantir has fallen a lot. It is a popular name. What are some of the other trades that you can potentially buy for a bear market rally? You can look at Moderna. Full disclosure, this is not one I'm taking, but Moderna is one that can potentially bounce from here. It looks like it's setting itself up to bounce. You can maybe ride it for a few days, but this is another name I'm looking at. Apple, I think you can get a little bit of a bounce. You got Papa Warren Buffett buying here, and for that reason, you can probably get a bounce on Apple. Here's a trade I actually did take. This has been one of my best trades of the year, despite me doing it in pretty, actually it was a pretty good size. I bought 1,000 shares of coin around $44 a share. I sold it at 69. It went up to 75, but that's okay. I'll take that money. I'll run. Helps me reduce some of my Palantir losses. But yeah, this is one trade I've taken. I think coin can rally from here a little bit further. So a lot of the Cathie Wood stocks have been beaten up a lot. Shopify is another one that I have been kind of looking at. Look at the sell-off in Shopify from like 1,700 down to like 330. But I think this is like a candidate that could have a bear market rally. Having said that, it's failing to actually like rally from here, any sort of action from here. So the actual intraday tape in Shopify, it does not seem like it wants to bounce yet. Versus coin, and I'll talk about a few more that seem like there's some action now behind it. So the last few stocks that I'm actually looking at a lot in the Cathie Wood's portfolio, but the other one is Twilio. Twilio has dropped a lot. Like, honestly, if you guys even want, you can just, if you're gonna play a bear market bounce, you might just want to look at ARK altogether, which is the Cathie Wood's portfolio. But let's go back to Twilio. Twilio's kind of fallen from 405. I know of YouTubers who were recommending Twilio at 405, and that's gotta suck, buying it at 405. I never ran fundamental analysis on any of these stocks, by the way. I'm just playing the tape. Twilio seems like it's closer to a Shopify, where I don't think the intraday tape is gonna bounce, but I do think that when they do end up bouncing, they're gonna bounce pretty hard. But this is another trade that I would potentially be looking at. Okay. One that has been moving on pretty good earnings season is Zoom. This is a trade that I missed. And even though I was planning on taking the trade, I missed this trade. I was like, oh, okay, I'm gonna probably buy Zoom or whatever, and I screwed this one up. I ended up buying more Shopify than Zoom. I didn't buy any Zoom at all, but this is another one I would look at for a short-term bounce. I don't think any of these fundamentally even here are great prices. These are stocks that I'm playing for a potential bear market rally, a rally where, hey, all of the people who have sold. Let's see if some buyers step in right now. You know, still setting the rules of stop losses, all those things still apply, but these are the names that I'm watching for a bear market play. Oh my God, there's so many. I hope I can keep this video short. So the next stock I want to talk about is Teladoc. I did take a piece of Teladoc. I bought it around $30 a share. It's around 35. I sold half of my position around 33, and I sold the rest around 34.50. I don't hold Teladoc anymore. I do think it can potentially bounce from here though, even further. This is a name I would look at. Full disclosure, I'm already out of the position. I bagged enough money on Teladoc for me to be out. Roku, I've already cut Roku, but Roku, these are names I'm definitely watching for bounces because they're super volatile and super fun to play. Roku is another one. I managed to get Roku around 77. I sold it at 88. It's around 96. I sold half of it at 88. I sold the remaining half at 92. It's bouncing even further from here. Now you guys might be asking, why am I not accumulating, or why am I, just selling these so quickly as flips? I'm still nervous, you guys. Even through this window dressing period, I'm holding some names, and I'll talk about that later. I think these valuations are still frothy. Now, I will get back in. Even if I see the market has calmed down and Roku's at 120, I might just get back in altogether. But I think there's a lot of negative catalysts in the market. I kind of want to just play things a little bit on the cagier side of the trades. But these are trades I'm definitely watching, and names I'm definitely watching, seeing how they play out. I mentioned this earlier. Netflix. I took another lot of Netflix. I got, my original trade, I took one around 200 a while back, got stopped out. I took another trade around 170. I think it was like 174 was my cost basis. I took half of it off already. I'm still holding half of Netflix. Facebook, I'm doing something very similar. These stocks have dropped a lot. But it seems like Mark Zuckerberg's going ham on the metaverse investment. We'll see how that plays out. And lastly, the two other names I'm watching are Plug. I'm getting a phone call. Plug seems like it's ready to bounce. But Plug is very volatile. It could easily crack from here. I was watching Plug. I'm holding, I sold a lot of Plug, but Plug left me in a bad spot because I thought it was going to break out a few months ago. I called it out on my Sunday video a few months ago, where I was very interested in looking at what happens with Plug, only for it to crack after a massive spike right here. So Plug tends to do that, and that's something you have to watch out for with plug power. A lot of analysts are expecting it to be around 40. You can kind of view where plug was at one point. Lastly, one of the trades that I think is kind of the one that I've kept on is DraftKings. DraftKings is right around $14 a share. I actually bought a huge position in DraftKings around 11. And this is actually one of my largest adds. I've only taken off about a third of this. This is one I'm holding. The action seems to be very strong in DraftKings, maybe because it's just fallen so much since the sell-off started. It was at 60 bucks a share. But this is one that I'm watching. Tesla, I started trading Tesla again, you guys. These are all intraday trades for me, but this is one I'm watching, Tesla. Square, oh, did I even talk about Square? Oh my God, I didn't talk about Square. Square is another name that I am buying. I actually think it's one of the best names that have dropped a lot. And I had bought Square at 77 and I am holding on to 2/3 of this trade still. I don't know what the proper way of doing this is. This is gonna be like a 33-minute video. Do I divide this up? Do I don't know yet, into many smaller segments? What am I buying? All this shit, or whatever. But it's very dense in information. I get that. So yeah, that's a lot of the stuff that I kind of want to talk about right now. My last piece of advice is don't go broke.
I just want the money, 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 money.